This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everyone. It is Bloomberg Businessweek Daily, live from the Bloomberg Businessweek studio in New York. I'm Tim Stenovec. That is Isabelle Lee. She's in for Carol Massar. She's from the Bloomberg News cross-asset team. It is, of course, Nvidia Day, Isabelle, and it looks like stocks, well, moderately higher ahead of that print.
Investors will be focused really on everything Nvidia, on the Blackwell chip, on the sales in China, and really what this means for the AI landscape widely.
We got a great roundtable coming up in just a minute. Caroline Hyde is going to be joining us. Also with us is Kunjan Sobhani of Bloomberg Intelligence. Also, a deep dive into the U.S. economy. We're talking everything from tariffs, labor, AI, and yes, Fed independence. Michael McKee is going to be joining us in just a minute. And then Natasha Sarin from the Yale Budget Lab. All that and more coming up over the next hour right here on Bloomberg Businessweek Daily. First up, though, here he is for a check of the day's trade and those top business stories. Charlie Fella.
Hi, thank you very much, Tim. And all about Nvidia right now. With Nvidia shares, they're gaining 0.2%. S&P 500 index trading at a record. Will it close? Got to keep it locked into Bloomberg Television and Radio for the latest. S&P right now up 15. We're trading at 64.81. That is a gain of 0.2%. The Dow up 148, now up 0.3%. Nasdaq Composite Index up 0.2%. The Bloomberg Mag 7 Index flat on the day right now, but Nvidia pushing higher by 0.1%. The 10-year 4.24%, with a 2-year 3.61%. Gold a little changed, up $1 the ounce, $33.94. West Texas Intermediate crude up 1.1%. WTI 63.95 a barrel, and Bitcoin now up 0.9%, 112,371 on Bitcoin. Also reporting today after the close of trading, we'll be hearing from CrowdStrike and Snowflake. CrowdStrike up by 2.2%, Snowflake up 3.5%. Again, Nvidia after the bell up by 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. We start with the U.S. Central Bank and the Trump administration's push to remove Fed Governor Lisa Cook. The Trump administration continues to push for her ouster. Here's NEC Director Kevin Hassett earlier speaking to reporters outside the White House.
The president absolutely has authority to fire a Fed governor for cause, and I think the accusations are serious, and I look forward to seeing the outcome. If I were her in her circumstance, I would take leave right now. I think it's the honorable thing to do.
That was National Economic Council Director Kevin Hassett at the White House earlier today. We should note the expected lawsuit by Fed Governor Lisa Cook that challenges her firing by President Trump could be filed in D.C. federal court as soon as today. This is according to a report from CNBC. Michael McKee is international economics and policy correspondent for Bloomberg TV and Radio. He joins us up in our Boston bureau this afternoon. Mike, how's the Fed handling this? Because yesterday the central bank said it would, quote, abide by any court decision. But how is someone like Lisa Cook able to do her job as all of this is happening?
Well, obviously, she's going to be distracted. She has to defend herself. She's hired a lawyer, and I'm sure she'll be working on that. But there is a very important Fed meeting coming up on September 17th, and this whole court appearance that's going to happen is going to be very important to that, because if the court rules that the president can remove her from office, even if they haven't completely adjudicated whether he has the right to do so, in other words, if they turn down a stay, an injunction to keep her working while they fight in court, then her voice won't be heard at the meeting, and that'll be one less person who will be voting. And she had indicated earlier in the summer that she might be ready to vote for a rate cut. So it is interesting to contemplate what might happen.
But if the court decides that Federal Governor Lisa Cook can stay, has the damage already been done?
Not necessarily. A lot of it depends on how this all works out in terms of what she did and whether it was illegal or not, if it was a small thing or if it was a deliberate attempt to evade taxes or to cut your interest rate payment, something like that. The president will be seen as political if it turns out to be nothing, and the Fed probably gets by. But if it does turn out that she did do something, even if it doesn't rise to the level of legal cause, and that's a whole separate argument, then the Fed does lose some credibility. So the Fed is trying to be very careful right now and not get involved in much of the PR. They did put out the statement yesterday, as Tim noted, that they would abide by all court rulings and that Lisa Cook was a Senate-confirmed appointee, which is kind of a shot at the bow of the president. But beyond that, I wouldn't expect them to say too much until they have a lot more information.
All right, Michael McKee, international economics and policy correspondent for Bloomberg TV and radio. Mike is going to be joining us in just about an hour at the top of the 3 o'clock hour on Bloomberg Businessweek Daily. Well, for more on the economy, everything from tariffs, labor, productivity, and yes, the question of Fed independence, I want to bring in Natasha Sarin. She's the co-founder and president of the Yale Budget Lab. She's also professor of law at Yale Law School. She's got an appointment in the Yale School of Management's finance department, too. She worked at the Treasury Department as counselor to Treasury Secretary Janet Yellen. She joins us from New Haven. Natasha, good to see you. I want to start with referencing an opinion piece from Bill Dudley on the Bloomberg earlier today. He's former president of the Federal Reserve Bank of New York. He's out with a column today that says, up to now, he wasn't worried about the threat that President Trump poses to the Fed's independence. Now, he writes, he's much more worried, and he thinks the markets should be too. Does the president's attack on the Fed risk? Should we be worried about the president's attack on the Fed?
You should be, and I agree wholeheartedly with Bill. I think you're in such uncharted territory at the moment because remember, this is coming on the heels of many months of the administration arguing that the Federal Reserve should be cutting interest rates in accord with the political whims of the Trump administration rather than based on its very particular dual mandate, which is about inflation and it's about the labor market. And the fact that we have a central bank that's independent, that cares about those two things and those two things alone, is a really significant source of our economic security. The way I know that is because we have experimented in the United States, as have other countries, with Federal Reserves that become politicized. In this country, in the Nixon administration, we had Arthur Burns, who was pushing for interest rates to help President Nixon get elected. And the result of that was runaway inflation that increased from 3 to 13% over a 2-year period. So we do not want a central bank that functions based on short-term political whims. And I'm really worried we're moving in exactly that direction.
The Fed said they will abide by what the court decides. And President Trump yesterday also said he will abide by the same. But if the court decides that Lisa Cook can stay, are we past a red line? Like, is the damage already done when it comes to the credibility of the Fed?
I hope that the answer to that question is no. And I really hope that what's important to note in the context of the legal discussion here is that the Supreme Court has really gone out of its way in a case about removal that had nothing to do with the Federal Reserve to signal that the Federal Reserve is special and that these types of positions, because it's a quasi-private institution with a particularly important role in our economy, these types of positions are really only for-cause removal positions. And frankly, for-cause rises to a level in legal nomenclature that it's pretty hard to meet in the context of malfeasance. And so I think that the court has already signaled directionally that they really think protecting this institution and protecting its independence is immensely important. And I hope that that's what they continue to say as this particular legal case plays out in the courts. But the thing that I'm worried about is the sort of institutional credibility and the view by the markets and by the public and by other countries and other investors that our central bank is independent from any type of politicization. That's kind of a genie that you can't put back in the bottle. It's something that's taken decades and generations to build. And I worry that it evaporates pretty quickly as a result of some of the types of attacks that we're seeing. So I'm hopeful that the judiciary is going to step in appropriately here, but I'm still really disheartened to see the types of attacks that you've been seeing leveled at the Federal Reserve of recent.
So let's keep your law professor hat on for a moment, Natasha, and talk a little bit about the definition of for cause in this context. You touched on it, but I'm curious if, let's say, the allegations about mortgage fraud end up, and we haven't seen the evidence here, that we don't have that yet. But when it happened, if it happened, matters. My understanding is intent matters as well. So from a legal perspective, why don't you think this would qualify as a for-cause reason?
I'm far from an expert on for-cause removal, nor have I looked at the specifics of this particular case, and nor, frankly, could we have at this point, because Lisa Cook hasn't been charged with any crime or anything. This is a set of allegations that have been leveled at her by the president and by the administration. What I can say is that in the particular context of removal with respect to the Federal Reserve, the court has been pretty explicit that it thinks it's important, and you saw it in the statement that the Federal Reserve put out yesterday. These are Senate-confirmed positions with very long terms that run cross administrations, precisely to try and insulate this institution from exactly the kind of political pressure that we're seeing levied against it. And this isn't just about mortgages, nor has it been about the renovation of the Federal Reserve building, which has taken a lot of airtime over the course of the last many months. It's very clear that what's happening here is really frustration with the direction of monetary policy, and that's really no place for the administration to be acting. In fact, it's frankly counterproductive to their goals of seeing interest rates come down and seeing economic strength be very significant in this country.
We're speaking with Natasha Sarin. She's the co-founder and president of the Yale Budget Lab. She's a professor of law at Yale Law School and has an appointment, too, in the Yale School of Management's finance department. I promised we'd go all over, so we're going to move from the central bank to really what I think a lot of the market is kind of moving past, and that's tariffs, because earlier this month, our team reported that the average U.S. tariff rate will rise to 15.2% if rates are implemented as announced. This is according to Bloomberg Economics. It's up from 13.3% earlier and significantly higher than the 2.3% in 2024 before President Trump took office. Just today, the latest, the president imposed a 50% tariff on Indian goods to punish the country for buying Russian oil. That's the highest tariff in Asia. I'm wondering how you're looking at the fraying relationship between the U.S. and India and what's at stake more broadly when it comes to this tariff.
Importantly, what we should understand, and my colleagues at the Budget Lab are hard at work, by the way, updating our estimates with respect to what happens to the effective tariff rate and what happens to the type of revenue that we're going to see coming into this country. But roughly speaking, you've seen about an 8-fold increase in the average effective tariff rate over the course of the last 8 months of this administration, bringing in about $3 trillion of revenue into the country over the course of the next decade. Importantly, and this goes a bit to your point, Tim, it's never been super clear to me what exactly the objective is of this type of trade policy and where exactly it is that the administration is hoping to land. Because part of what you've seen articulated is that this is really about sort of China and national security and being sure that our adversaries are held at bay. In that environment, you really are quite worried about the idea of alienating allies and being particular with respect to not just India, but if you think about Canada and Mexico and other countries where traditionally they've been very strong allies of the United States. And in fact, we've been encouraging of more manufacturing to shift, particularly to India and Vietnam, exactly because it shifts away from China. And so a little bit it feels like this policy has been kind of inchoate and all over the place. And it's hard to analyze like exactly why it is we're doing what it is that we're doing in order to be able to try and judge any success. What I can say is as a result of the tariffs so far, prices are going up and going to go up further. The economy is going to be smaller. And it doesn't seem like a win from the perspective of the American consumer or from American businesses.
I'm glad you brought that up because I'm curious if you think this will undo all the years of goodwill that the U.S. and India have built.
Well, I think that I'm worried about, frankly, is that you are in a situation where we are very exposed to particular relationships that it's taken to, and this actually relates to our conversation about the Federal Reserve, in that a lot of the sort of goodwill that you're describing are things that it's taken decades across administrations to try and build the types of working relationships with our allies that have made us this global hegemon and have made us a real marker of stability in the economy, a place that other countries want to invest in, and other investors, both domestically and internationally, are keen to spend time in and around. And so what you worry about in some sense is not just, are you alienating one particular ally, or are you moving us, sending some other countries closer into the arms of China? Of course, you're worried about all of that. But also, I think what you're worried about is the general sort of chaos of not exactly knowing where these tariffs are going to land, not knowing if it makes sense to try and shift part of your manufacturing supply chain into India, because if India's effective tariff rate is 50%, it's no longer the type of place where you're going to want to be pursuing a lot of that type of business. So I think it makes decision-making really complicated for the United States and for the businesses that are in this country. And it also runs real risks geopolitically that are pretty concerning.
I promised we'd go everywhere. We have a few minutes left, and I want to talk a little bit about the labor market and productivity in the context of record low birth rates in the United States, immigration that has come down quite a bit during this administration, and what it means for a workforce moving forward. How do you weigh those two things?
It's so interesting because I was actually talking to some colleagues some friends who work at the Congressional Budget Office who have said that one of the reasons why you have productivity growth over the course of the next decade, that their estimates are going to average in the 1.82% range, GDP growth in the 1.82% range over the course of the next 10 years, is precisely because it's on the back of an increase in labor supply that comes from immigration. And the reason why that's so important is because, as you're describing, Tim, we have an aging population in this country, so a big chunk of people are going to age out of the labor force. It's really important that you have that supply coming in. In a world in which you don't have that supply coming in meaningfully, and you've kind of shut down pathways to immigration, as you've seen policy-wise over the course of the last many months, you start to lose a very significant driver of labor force growth, and then you start to lose a very significant driver of productivity and broader economic growth. The thing that's interesting is it's happening at the same time as you're seeing potentially this productivity revolution that's coming from artificial intelligence. So in some sense, it's hard to know exactly how to disentangle those two effects as we watch the direction the economy is going over the course of the next many years. But restricting labor supply is going to have a pretty meaningful impact, particularly on sectors of the economy like construction and manufacturing.
But with AI investment booming, do you think that AI will be able to offset the lack of workers, whether in relation to immigration, the supply of workers that we have, or are we facing right now?
It's kind of hard to answer that question right now in some sense, because it's hard to know exactly what to make of the very significant capital expenditure investments we're seeing in AI, and hard to know what to make about the role that AI is having in the labor force thus far. There's a great new paper by Eric Brynjolfsson and co-authors where they look at the extent to which you're actually starting to see displacement in the labor force that has to do with artificial intelligence and its growth and usage across different sectors of the economy. And they do find that you're starting to see, particularly for younger workers who are in the most exposed industries, you're starting to see actual impacts with respect to their possibilities of labor force entry. And so I do think that there is going to be an effect here that's meaningful. It's just really kind of early innings with respect to this type of productivity change and shift, and early innings with respect to knowing whether AI is really a complement or a substitute for other aspects of the labor force.
Yeah, perhaps a good segue to our conversation coming up all about Nvidia. Natasha Sarin, co-founder and president of the Yale Budget Lab, professor at Yale Law School and the Yale School of Management. Thanks so much for joining us. This is Bloomberg.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Nvidia shares pushing higher ahead of earnings, up now by 0.3%. The Dow, the S&P, NASDAQ all advancing. We've got the S&P trading at a record 64.84, up 18 right now. That is a gain of 0.3%. The Dow up 158, up 0.4. NASDAQ Composite Index up 0.3. NASDAQ 100 Index up 0.2%, and our Mag 7 Index up 0.1%. Nvidia, of course, a member of that index, again surging now, actually higher by about 0.3%. The 10-year 4.23%, with a 2-year that's currently yielding 3.62%. Gold up $1 the ounce, $33.94, up less than 0.1%. While West Texas Intermediate crude is up 1.3%, $64.07 a barrel, and Bitcoin up 1.1%, $112,550 now on Bitcoin. Kohl's shares are surging after earnings. Kohl's up now by 17.1%. Abercrombie & Fitch reported this morning down now by 0.8%. Officials in Minneapolis say a shooter opened fire this morning during Mass at a Catholic school, killing 2 children and injuring 17 other people before killing himself. Minneapolis Police Chief Brian O'Hara says the shooter, who was armed with a rifle, shotgun, and pistol, approached the side of the church and shot through the windows toward the children sitting in the pews during Mass at the Annunciation Catholic School. Recapping, stocks higher, S&P up now by 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thanks, Charlie. Appreciate that. Well, Nvidia reports after the bell today. As we've been saying, there is a lot riding on that report. It's the world's biggest stock at more than $4 trillion in market cap. It makes up 3% of the global market cap of all public companies. The remaining 97% of the stock market around the world is 82,551 stocks. So yeah, it's big and it's a closely watched event, and we're going all in on it today ahead of those numbers and for analysis and a breakdown when we do get them. Here with What to Watch is Caroline Hyde. She's the co-host of Bloomberg Technology on Bloomberg TV. Check it out every day, 11 o'clock a.m. Wall Street time. Kunjan Sobhani is also with us. He's Bloomberg Intelligence Senior Semiconductor Analyst. Caroline joins us here in the Bloomberg Businessweek studio. Kunjan out there in San Francisco. Caroline, I want to start with you and just what this has become, this event for markets, for investors, for analysts, for the tech industry.
Super Bowl.
It really is. The Super Bowl 4 times a year.
Yeah, exactly. It's exhausting.
But it is. And there's really nothing like it. Why? What's going on here?
Well, because we've got a $4.4 trillion company. And not only is it relevant for anyone's 401k, even if you're not a direct holder in Nvidia, you're going to be exposed to it in some way. But it's the ripple effects. The entire AI trade is built upon this particular bellwether. If they send shockwaves that demand isn't as steady as people had anticipated, the profitability isn't as steady, if they got worries in China and more broadly, it will have knock-on effects to not only its competitors, but to the power industry that's meant to be channeling through into the AI trade, or whether it's just all of the ecosystem that's built up around it, the application of these generative AI compute workloads that you do with these GPUs. So I think it's really important that they continue to show that the growth is there, the fact that even when you're a $4.4 trillion company, there is still room to have a 50% increase in earnings per share and a 50% increase in revenue. Yes, it's cooling down from the more than 200% growth rate that we saw in revenue in the previous fiscal year. But we want to see what the forecasts are like in particular, because I think that's where the discrepancy comes between analysts. At the moment, you've got a $15 billion range between the top of the highs in terms of like $62 billion for the next fiscal quarter's revenue, and $15 billion below that is where the lowest guide is. And so I think analysts are just trying to understand, do I put China in my numbers or don't I?
So given that, Kunjan, what do you think can move the needle with this spectacular run-up of the stock? Is it gross margin? Is it the China story, to Caroline's point? What are investors going to be closely watching?
It's going to be primarily the revenue and the China story. I mean, when you look at the guide for the 3Q numbers, this is the largest variance we have seen in the last 2 to 3 years when it comes to consensus estimates. And it's because the consensus is really noisy, having some analysts inputting China revenues coming back as early as 3Q, while a lot more, or majority, not. So there's a lot more wider range, and the buy side sort of range is even more wider and much higher lofty expectations. So it is going to come down to them clearing sort of this hurdle and a variation, as well as giving more intel on when the China revenues start coming, and whether it's the Hopper series that they will really ship to China, or will be a variant of the Blackwell that will drive most of the revenues for China.
So Kunjan, let's stick on that, because we're talking, about China and the H20 processors, and the question that I think a lot of people have is, to what extent are Chinese firms actually buying these processors, given the restrictions or the removing of restrictions, plus Beijing essentially saying, hey, we want you to use local competition instead. What's the read-through there?
There's various factors driving it. One is what you outlined, that is there demand still existing for the H20s? Do customers still want to buy, given the nationalist preferences in China and given the options available? The second really is, can the supply chain is really ready to push enough, if the customers wanted to buy them, to start showing revenues in 3Q or 4Q. So you really have to try to balance these two acts. We think, in our view, that the supply chain will take some time to really ramp up the China back up again, especially when talking about the H20. Secondly, we still believe that despite of the preferences of the governments for the big customers in China not to use Nvidia chips, there's still a lot of appetite to the tier 2, tier 3, and the lower areas where those customers cannot get any chips, whether it's chips from China or whether it's Nvidia. So they still will take whatever is available, whatever you can ship. I mean, they would still start taking a Hopper or a Ampere series chips if they can get their hands on.
Caroline, can you imagine a world in which Nvidia just doesn't exist in China? I'm just imagining how hard of a presence would it be to maintain one in the US and one also in the Asian nation.
Well, I think that has been what's been at some rumors around why DeepSeek hasn't been able to make as bigger iterations in its underlying model as of late, as if it's been forced to be training more on locally homegrown semiconductors rather than Nvidia's. But this has been going on a while. The government has been trying to push its big LLM developers, whether it's DeepSeek, whether it's Alibaba, whether it's the others, to use local source. I mean, Cambricon Technologies, just to look at that company, it posted its earnings yesterday, technically our time, but overnight. This is a company that is added now, gone 44-fold in revenue in just a year. They're going from a gross loss over into net revenue, net profit finally, because there is such insatiable demand for local players. I mean, it has doubled its market value to $80 billion, and that's not much compared to $4 trillion, but it's doubled in a month. And this is because there is so much desire to back these local players. So yes, there are all alternatives out there, but they're not nearly as powerful as a dumbed down, obsolete, as the President of the United States called it, H20 chip, let alone what the B30 could offer them if they do start doing Blackwell architecture as well in a more underperforming manner for the Chinese market.
You mentioned the president, so we're going there, and we're going to the big news from just a few weeks ago that certain products sold within the Chinese market by AMD and Nvidia, 15% of that revenue will go to the U.S. government. Caroline, we don't know what to call this new form of American capitalism yet, yes, especially with regard to Intel and U.S. Steel and MP Materials and everything happening there. But are we going to hear details or get details from Jensen on the call about this? Are there still questions that you have about the structure of this?
Well, I suppose for many analysts and investors, the idea that 85% of something was better than nothing. Yeah. And so they're hoping that maybe this is I think the questions might more revolve around, what about the Blackwell iteration? That's what was hinted at by President Trump. At the moment, we don't know whether there's much demand for H20 full stop. Many are going to push on that information report that was that actually Nvidia's asked its suppliers to stop making H20s for the time being. But is Jensen Huang generally confident that the president's going to give him an okay to sell the next version of a Chinese chip? Is he going to allow Blackwell architecture into the country? How much does national security trump basically getting a little bit of a cut of the deal and ultimately continuing to be able to do trade with China? It's going to be the key question, I think. I have no idea whether Jensen's going to go there or not. He's someone that people want to give very long-term forecasts, and in general, he's going to talk about the Rubin, I think, in his next innovations. But whether or not he'll give clarity on actual profitability and revenue guides past fiscal third quarter, let alone his dealings with the president, we don't know.
We're speaking with Caroline Hyde, the co-host of Bloomberg Technology on Bloomberg TV. Also, Kunjan Sobhani, of Bloomberg Intelligence. He's the senior semiconductor analyst out there in San Francisco.
Kunjan, more broadly, do you think there's just too much faith in AI? When we think of productivity, will this come from existing AI companies, or will it come from those that have yet to be built when it comes to the AI ecosystem?
I think that it's going to be a combination of both. When we try to answer that question, is it a bubble or is there too much faith? We try to look at the data that we have available. Over the last 12 months, the biggest spenders when it comes to this Nvidia GPUs have shown a lot more return in the monetization of these GPUs. Nvidia's own numbers, if you believe them, is showing for the Blackwell significant, almost 2x return when it comes to the dollar per token generation. And most of these companies are showing good projections in terms of their monetization and IRRs of deploying the capital from Nvidia. So far, it's still looking good, but definitely we don't think that this entire boom from AI or the monetization or the sort of use cases will only come from this handful of players. We think there will be a lot more of sort of the new open AIs getting born, which will drive or continue the extension of momentum of this AI rally.
Carolyn, you've mentioned, I've been watching you all day. This is probably your 10th hit. And then you said there's some Meta, Microsoft, Amazon, Alphabet. They account for 40% of NVIDIA's revenue, and all those four comprise 15% of the S&P 500. Talk to us about how vulnerable this entire system is. I feel like they're all interconnected. And if one falls, what will happen to the rest? And how will that look like for the market?
And I think that's why the joyous reporting and analysis that Bloomberg Intelligence does is so great, because I think in many ways that's where many analysts wants to see a little bit more diversification away from these hyperscalers. Actually, at the moment, we've all got great mood music coming out of these companies. Alphabet says, oh, I'm upping my capital expenditure just this year alone to 85 billion. The market round of applause for Alphabet, and indeed it signals great things for Nvidia. So all of these companies still seem to be committed to capital expenditure remaining at these elevated levels. But I think many are waiting to hear more talk of sovereign AI. What is it that countries are doing? How is the Middle East beefing up what it has to offer? How is data centers and GPU demand growing there? What about Europe? We had a great guest on earlier on the show really talking about the fact that there's very bifurcated development and really fall in on AI across Europe. For example, Denmark going great guns, where other countries haven't yet. So there's going to be a real pool of demand from sovereign AIs worldwide. How does that diversify Jensen Huang's revenue stream so he's not so dependent on just these four hyperscalers?
Kunjan, very quickly, 20 seconds left, giving you the last word, the question I ask everybody whenever this time rolls around each quarter. Can anyone hold a candle to NVIDIA's chips?
Not at this point, not in terms of the overall end-to-end system and software and networking, which we expect good news to come out of networking tonight. Not really when you combine all of them together.
Okay, there it is. The moat still safe at this point. We expect those numbers to cross just after the market closed last quarter, just around 4:20 p.m. Wall Street time. We will bring those numbers to you live on Bloomberg TV and radio. A big thank you to Caroline Hyde. She's the co-host of Bloomberg Technology, 11 o'clock Wall Street time on Bloomberg TV. Kunjan Sobhani, Bloomberg Intelligence senior semiconductor analyst. Check out all of his research and from his colleagues too on the Bloomberg terminal. Coming up next, we're talking retail. This is Bloomberg.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the S&P 500 index trading at a record, very close to session highs. Indeed, ahead of Nvidia earnings after the close of trading. Complete coverage on Bloomberg Television and Radio as that number drops. Right now, Nvidia shares ahead of earnings up 0.1%. The S&P up 19, up 0.3. The Dow right now advancing 0.4%. The Nasdaq Composite Index up 0.3. Interestingly, we've got the Bloomberg Mag 7 index a little changed up by 0.1%. Again, Nvidia up 0.2%. Spot gold right now up $2 the ounce, up 0.1%, $33.95. West Texas Intermediate crude up 1.4%, $64.15 a barrel. The 10-year 4.23%, with the 2-year yielding 3.62%. Cracker Barrel Old Country Store getting rid of that new logo that sparked controversy and promoted a slump in its share price today. Cracker Barrel surging 8.2%. Recapping, S&P up 0.3%. Nvidia ahead of earnings up 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. Certainly a lot of focus on Nvidia today, but do not forget there are other companies reporting today and tomorrow. In retail specifically, Kohl's shares surged after the company offered a more optimistic full-year outlook. Abercrombie and Fitch shares, well, they've been all over the place, as high as 3.3%, as low as down 10%. Investors are trying to decipher a mostly and modestly better than expected quarterly performance. Back with us to talk retail and more, Dana Telsey is here. She's the founder and CEO and Chief Research Officer of Telsey Advisory Group. She joins us here in the Bloomberg Businessweek studio. So, Dana, we still have to hear from Victoria's Secret, Dick's Sporting Goods, Dollar General, Best Buy, The Gap, Macy's. But we've heard from a lot of the big ones, Target, Walmart, and the like. It's not a monolith by any means, but how are retailers doing?
First of all, thank you for having me. I think retailers are doing okay. They're navigating this environment very well. Navigating it because sales strength exiting the second quarter is continuing. You're seeing the fact that consumers may be buying a little bit earlier to avoid any of the price increases, given the goods in the second quarter weren't as high tariffed as what you may have. And you know what else they're doing? Marketing spend is increasing, product innovation is driving conversion, and denim jeans are working. You're seeing across the board, whether it's Kohl's, whether it's any of the other retailers, wide leg, baggy is hot these days.
Like I'm in 7th grade all over again. That's what it is.
Yeah, keep repeating 7th grade.
Yeah, it's what we wore. That's crazy.
Yeah, that's what's happening again. And the tariffs, yes, there definitely are an uptick, and you're hearing that consumers overall, we don't know what they're going to react to these higher prices. They're first expected to come late Q3 and into Q4. But the retailers are managing, frankly, a little better than what I would have expected.
So you mentioned sales strengthening. Do you view this as a sign of durable consumer strength or more like pre-tariff buying or because of the great promos we're seeing? How do you assess the health of the consumer?
I think the health of the consumer is pretty much okay. I think consumers are spending deliberately. I think the high end is traded down. We've consistently heard of Walmart getting the biggest growth from some of their higher income customers. You're seeing the Ralph Lauren's or the Tapestry drive average unit retail selling price increases with product innovation. And frankly, look today, Hollister delivered a double-digit same-store sales increase, which was impressive. And you look at Kohl's basically improved their proprietary brands because that value customer wants to see newness in proprietary brands. And let's not forget, we're going to get the last off-pricer tomorrow, but TJX and Ross were also solid. Consumers are buying ahead of price increases. Retailers are delivering product newness. It's back to school season, and everyone's still being discerning.
Another thing I'm looking at is retailers are still investing in store openings and remodels. So how much is that translating into traffic and conversion versus just being more defensive? I personally shop online and I don't go to stores anymore, but it seems like people still do.
They do. When you think about store openings in retail real estate, there is more demand than there is supply. There's not a lot of new development. Any of the closures that you've had, companies and retailers are taking them. The growth of whether it's a Five Below, a TJX, a Ross Stores, or Burlington, there's hundreds of stores that can open. You've seen the landlords overall pivot. Basically, grocery-anchored shopping centers can be lifestyle also, and vice versa. Wherever the consumer is located and near, it's more a focus on where can I get the goods. And yes, online is still there, but it's not either or, it's both.
We got to talk about these India tariffs, 50% on the country. It's upending ties with Modi and with a long-time and an ally that wants to even become closer to the United States. Exporters of clothing, footwear, and small manufactured goods like toys are bracing for falling orders and possible job cuts. What's going to happen as a result of these tariffs?
I mean, we saw it when it was just so high on China, too. Retailers work to do three things. They diversify their sourcing as fast as they can. They share the expenses with the suppliers and manufacturers. They raise prices to the end consumer. Hard to do this so quickly, and it's an obstacle.
There's a great chart in the piece that comes from data from the White House, and it shows that India tariffs are the highest of any Asian nation, 50%. But other countries, Laos, Myanmar, 40%, China, 30%. You've got Sri Lanka at 20%, Taiwan, Vietnam, Cambodia, Indonesia. I mean, these places I'm mentioning all export to the United States, many of them are areas that have been diversified to away from China. So you can only diversify so much if everybody has tariffs.
Exactly. And you can't come back to the United States for all intents and purposes, given you don't have the labor and it's prohibitively expensive. What we've seen happen is we've even heard of some retailers who diversified away from China. They went back to China because the tariff became a little bit lower than some of these other places. Wow. It is moving pieces all together, and it's not staying stable.
When do we see it hit the actual price of these goods? Because up to now, as you mentioned, retailers are eating some of this, but how long can that go on?
Since April 16th, we've had a price tracker of 80 items. We price it every single week. We've seen some increases, but not across the board. Footwear is where we've seen the increases. Expecting that by the end of the third quarter into this fourth quarter, we're going to see more expansive price increases, and we're still not seeing it holistically across the board.
We also have to talk about interest rates, and with the potential to lower interest rates, how much support could that provide the shoppers for discretionary spending when it comes to the holiday and in the lead up to 2026?
Just the fact that we'll have lower interest rates is a positive for discretionary spending. It's something that takes months in order to really put in action, but the feel-good factor of it will lead to a more productive spend. At the same time, when you're looking at the labor market, we watch it carefully because we can't see that labor market weaken, because that will ultimately impact holiday season sales. The strength of back to school is a good pathway to holiday.
It seems like broadly you sound really bullish. What could be a headwind then? What could really buckle all of this development to the downside? Labor weakening, price increases coming, and the consumer pulling back. That's why we say our theme is everything's good but. But will consumers slow down? But will retailers have the inventory? Second quarter so far, though, coming in better than expected.
How's ultra luxury doing?
Slowed. Ultra luxury is slowed. That? I think that you're not getting as many international tourists here to the U.S. You're seeing the Chinese not spend as much as they had been, and you're seeing prices for some of the luxury brands. Did they just get too high?
Interesting. So what are they doing to?
Well, look what the newest thing that just happened earlier this week. Louis Vuitton introduced a beauty line for Louis Vuitton. Usually
this is the $160 lipstick?
It is the $160 lipstick. Yeah. But that is the newest thing they've introduced, and so they're diversifying the categories that they compete in.
Is that going to work?
Everyone wants a little bit of luxury. $160 compared to Hermes, which is $80, compared to Chanel, which is $50 or under. Let's see what happens. But you know what? One of the things is, for all different types of luxury, consumers will pay up if there's exclusivity and a desire, along with authenticity.
So it seems like consumers are trading down, and we don't see a lot of trading up. Is that what you're saying?
Yes, we're not seeing the trade up like it had been before. If you look at the Walmart numbers, you look at the TJX, they're searching for value to maintain their pocketbooks.
Maybe the lipstick will change it, Tim. $160.
Yeah,
you can do it.
I heard that there's like a really nice case that it comes into, and that's like a big part of the appeal.
And then the refills don't cost $160.
Oh, great.
In that case, it's a real deal. Hey, Dana, always great when you join us on Bloomberg Businessweek Daily.
Thank you so much.
Dana Telsey, she's the founder, CEO, Chief Research Officer of Telsey Advisory Group. Taking a look at markets right now, the Dow is in the green, higher to the tune of 0.4%. The S&P 500 up 0.3%, as is the Nasdaq Composite. Shares of Nvidia up ever so slightly, 0.1% ahead of those earnings. I'm Tim Stenovec, along with Isabelle Lee. Let's take a look at some stocks that are on the move today. We're joined by Bloomberg News equities reporter Carmen Reinicke. Nvidia. Let's start there.
Yeah, I mean, it's the stock that everyone's watching. As you just said, up slightly right now. We've seen it kind of fluctuate throughout the day heading up to this earnings report. I think it's important to kind of take a step back, even though just from today's session, and note that it's less than 1% from a record high going into earnings. And the stock has rallied 35% from the last report in May. So we've just kept seeing Nvidia go higher and higher. And it's actually a pretty normal setup for the stock to be looking this good going into earnings.
Ahead of this, as I was preparing, Talia, our producer, reminded me that the stock has close to doubled since those April lows.
Yeah.
I mean, that was like post DeepSeek. It was a lot of questions about what tariffs would look like, and the markets were down overall. But the stock has close to doubled in just a few months.
Yeah, it's crazy. And I feel like it's something that the stock has done time and time again. You know, we've seen, multiple years of triple-digit growth from Nvidia. was the biggest point contributor to the S&P during that time. So it's a huge deal. And yeah, we'll all be watching it after hours.
All right. And Nvidia is the ticker.
What's going on in JM Smucker? I think the ticker there is SJM.
Yeah, SJM is down today. It's down right now about 4.6%. The company reported first quarter net sales that were weighed down by a decrease in sales of coffee, dog snacks, sweet baked goods, which specifically means Twinkies because they own Hostess, and fruit spreads. And I thought this was interesting because usually these are things that you would see people buying if the economy is doing well. I think we're always reading the tea leaves for how the consumer is doing. And this is a little bit more of like a negative read that, we're not seeing as many people buying coffee and dog snacks.
And Twinkies.
And Twinkies, exactly.
I thought everyone loves their dogs.
Wow. Millennials, right? They're supposed to be huge pet owners. Yeah.
All right, MongoDB, ticker MDB.
Yeah, so MongoDB shares are on an absolute tear today. They're up 36%. This is on track to be the best one-day performance on record, so since their 2017 IPO. And basically what happened is they've reported earnings that really outperformed, were much better than analysts expected, and they raised their full year forecast. Analysts at Citi said the report was a blowout and the quarter was a thesis-changing quarter for MongoDB. There was broad-based strength. This is also sort of an AI name. Analysts at RBC said, well, workloads remain early. They're benefiting from larger, durable use cases and continued expansion across the customer base. So really seeing growth from that technology.
That's Bloomberg News equities reporter Carmen Reinicke with today's Stock Movers. For more conversations like this, check out our new Stock Movers podcast. You can subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcasts. Well, those were a few stocks that were and are making big moves. For a broader look at the stock market and business news, let's head on over to Charlie Pellet for a business flash.
Thank you very much, Tim. Right now, we're looking at an update for the Dow, the S&P 500 index, all advancing. S&P, by the way, trading at a record right now, up by about 0.3%, up 19 points, 64.85. That will be a new closing high on the S&P. The Dow up 188 right now, up by 0.4%. NASDAQ higher by 50 for the NASDAQ Composite Index, a gain there of 0.2%. The 10-year 4.23%, with the 2-year 3.62%. Gold little changed, up under 0.1%, $33.95 the ounce. West Texas Intermediate crude up 1.2%, $64.04 a barrel on WTI. And Bitcoin is advancing by 0.7%, $112,190 on Bitcoin. So clearly the focus will be on Nvidia. It is the world's most valuable company. It's got a $4.4 trillion market cap. It also has an 8.1% weighting in the S&P 500, which is why everybody cares about what will happen with Nvidia after the close of trading. Again, Nvidia higher, just under 0.1%. Indeed, our Mag 7 index is advancing little change, but also up by under 0.1%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks, Charlie. Appreciate it. It is the one of the most read stories in the Bloomberg terminal over the last hour. Sadly, that's the case. 2 children were killed and 17 people injured after a gunman dressed in black fired dozens of rounds through the windows of a Minneapolis Catholic church holding a mass for elementary school students. We're joined now by Myles Miller. He's Bloomberg News senior reporter. He covers Homeland Security and the FBI. He joins us here in the Bloomberg Businessweek studio. I do want to remind everybody, Michael Bloomberg, the founder and majority owner of Bloomberg LP, it's the parent of Bloomberg TV and Radio, is a donor to groups that support gun control, including Everytown for Gun Safety. Myles, what happened here?
Yeah, 8:30. Kids are in school. The start of school. They're in this mass, and this gunman, armed with rifles, walks into the building and opens fire. As you said, 2 kids were killed, 17 people were injured after he went in to that school and opened fire. And from what I've been told by law enforcement officials, and from what I've been able to see from the suspect's social media accounts, is a person who feels like he had lost his touch with the world, and really in great detail went through lengths to write a 65-page manifesto, and none of it explains how you open fire in a school right after the start of the school day.
What else do we know? What else do we know about the gunman? Do we know any motivation?
Yeah, this is a 23-year-old gunman from Hennepin County, Minnesota, which is where Minneapolis is. One of many children of his parents. He actually referenced all of his siblings in his manifesto. And what we know about this person is that he one, acted alone, and two, had over a period of time. I mean, in the manifesto, he dated the first page in May of this year, so shows some level of pre-planning. But what we also know about this individual, based off of his own writings and what intelligence officials have been able to figure out about him, is that he had become a loner, and that he felt that this was the only way for him to go out of this world, number one. And then number two, what we've seen, in terms of this case, is that he wanted to be made famous. This is something we've seen with a number of these school shooters and folks who do mass shooting incidents, is that they want their name to be out there. They want the pages of their manifesto to be in the press so that they can get their message across. And thankfully, we work at a place where that's not going to happen, especially given the nature of this. I mean, you've got 2 children who were killed, and we heard in the press conference from the local hospital, you're hearing about these emergency room doctors having to treat kids who've been shot. It's really painful to think about.
I hate stories like this. I hate talking about this. I hate doing this. But this is the world we live in, Myles. We have to do this because this is what happens in our world right now. You cover Homeland Security on the federal level. The president has sent a message out. He's been in touch with Governor Tim Walz. What do we know about federal involvement in the investigation?
Yeah, the FBI is going to be doing some background work on this suspect to figure out just, to make sure that he was acting alone, to make sure that he's not tied to any other group. And they'll be doing the work to just figure out, what caused this. The FBI is in Minneapolis. They have a field office there, and they're quite trained to deal with situations like this. You'll remember just a few months ago, 2 lawmakers killed in Minneapolis, targeted, and the FBI worked on that case along with local law enforcement. But Minnesota's got a great state law enforcement group there who have been able to work on big cases like this. This again will get at, at the Trump administration what they've been trying to do in big cities. Just before this shooting, there was another big shooting in Minneapolis overnight. Several people shot, a person killed. And so, you start to think, will Trump say we should send folks to Minneapolis as well?
Myles Miller, Bloomberg News senior reporter. You're listening and watching Bloomberg.